Yeah, good to go. Now we will revise chapter 2, which talks about the residential status and scope of total income. So in this chapter, guys, we will be covering two sections, section 5 and section 6 of Income Tax Act. First, I would be covering it section 6, then I will come back to 5 and do it because section 5 is dependent on 6. So section 6 talks about the residential status. Guys, the incidence of the tax, whether a person is liable to pay tax on his income in India or not, depends on his residential status. Now, the residential status of a person is given in section 6 of Income Tax Act. I've just given the sections here in the order. What and all it covers? First, we'll just see that, then we will go and learn the provisions, guys. Section 6.1 gives the basic conditions applicable to the individual. There are two basic conditions. Even if one condition is satisfied, an individual will become resident in India. And when he become resident in India, he has to go and check additional conditions given under section 6.6 to see whether he is a ordinary resident or not ordinary resident. Yes, sir. Then coming to section 6.1a talks about deemed resident. If you are not covered under section 6.1 and if you fall under 6.1a, they are telling we will treat you as a deemed resident. Not for everyone, only for Indian citizen who is having income from Indian sources more than 15 lakh and all. They have told some terms, conditions and all. Only if I am covered there, I will become a deemed resident. If not, I am not. Okay. Then section 6.2, that is 6 subsection 2 and 6 subsection 4 you can study together because both has same provisions but for different set of people. Section 6 subsection 2 talks about the residential status of HUF, EOP and partnership firms, and wherever in income tax they have given firms includes LLP also. Then section 6.3 talks about the residential status of companies. All types of companies are covered here. Yes. And for income tax purpose, guys, companies are categorized into two. That is domestic company and foreign company. There are different types of company, but in income tax, mainly these two. Okay, even tax rates, everything is different for this two kind of company, and even Indian company also. So Indian, domestic and foreign company, you should be knowing it, and they have defined it under the income tax law also. Okay. Then the residential status of the BOI, AJP and artificial juridical person, that is AJP means artificial juridical person and local authorities, is given under section 6.4. But both talks about the same conditions. So we have to study it together. Yes. Next section 6 subsection 5 is telling one residential status for all sources of income per year. So should we determine the residential status for each and every year separately, sir? Yes, we have to determine. Okay. Now let us see the sections. Guys, I have done one single chart on the entire residential status. It is very lengthy topic, but I have tried to cover it in one single chart. Especially the residential status of individual is important. Why, sir? Because that is the most challenging thing. That is the most challenging thing. So please be very attentive. I will try to explain one by one. Yeah, first let us cover the residential status of individual, guys. Guys, we are deciding the residential status for which year? Previous year 24, 25. Previous year 24, 25 or assessment year 25, 26. For deciding the residential status of an individual for previous year 24, 25, the first thing what we have to see is, sir, in our previous year, how many days he or she was in India? How many days he or she was in India? Section 6 subsection 1 gives two basic conditions. If an individual satisfies any one of this, he will become resident in India. Sir, what if he doesn't satisfy both? Non-resident. Non-resident. Sir, what are the two conditions, sir? One, he should be in India for a period of total 182 days or more during the previous year. Clear? Sir, should it be continuous? No. He can come, go. Totally in previous year, he should be in India for 182 days. If satisfied, then straight away go and check ordinary, not ordinary under section 6.6. No, sir, first condition is not satisfied. Then only go and check second condition. Second condition, two cumulative points are there. 60 or more during previous year and 365 or more during 4 years preceding the previous year. So to count 4 years, should we count even our previous year? No. For our previous year, 60 days. Last 4 years, all 4 years put together, 365 or more. Sir, 1 year if he is there also, 365 is done. No, sir. Yes. He need not be there for all 4 years. But they are telling all 4 years put together, 365. Sir, 3 years he was completely outside India. 1 year completely in India. Satisfied. Satisfied. Sir, every year 100 days. Satisfied. 100 into 4. Satisfied. Clear. So stay need not be continuous. Out of 4 years, all 4 years put together, 365 or more, guys. Yes, sir. Next, guys, while counting the number of days of stay in India, the date of arrival as well as the date of departure is considered to be in India. Irrespective of the time, both is considered to be in India. Now, because especially when I'm leaving India or coming into India, I cannot see when exactly did I cross Indian border. Okay, I cannot peep, especially I will be traveling in flight. I cannot peep and see, where am I, where did I reach the India? So irrespective of the time, the date of arrival as well as the date of departure is considered to be in India, guys. Okay, so now coming to, sir, if I satisfy any one condition, I will become resident. Is that the end? No, we are only done with first stage. We are only done with first stage, guys. Now, once I am resident, if satisfied, I have to go and check section 6.6. Section 6.6 gives additional conditions for individual. There are two conditions. If both the conditions are satisfied, they become resident in India. That is ordinary resident in India. If both are not satisfied, or even if one is not satisfied, they become what? Not ordinary resident in India. Yes, sir. What are those two conditions? Let us see. Resident in India for at least 2 years out of last 10 years. So they should be resident in India for at least 2 years out of last 10 years. Guys, year 10 years also will not include our previous year. One thing you keep in mind, when checking 6.6, we are not checking anything for previous year 24-25. We are checking only for past years. We are determining the residential status for 24-25. But while checking the 10 years, 7 years and all, should we consider our previous year? No, preceding the previous year. Preceding the previous year. Yes, sir. So resident in India for at least 2 years out of last 10 years. That means in the last 10 years, this guy should have satisfied any condition given here. Na? Only then in that year, you would have become resident. You would have become resident. Now you might have confusion. Sir, at least for 2 years, he should be resident out of last 10 years. Na? Should it be continuous and all? No. Any 2 years out of last 10 years. And should he be ordinary, not ordinary, deemed resident? Any resident is okay. He should be resident, that's all. They're not telling he should be ordinary, not ordinary, deemed and that. Even if he was a deemed resident in that year also is counted. Because the word they are using is resident, that is fine. Any ordinary, not ordinary, deemed, anything is okay, acceptable. Okay, so first condition. Second condition, in between first and second, what is there? And is there. So both has to be satisfied. Second condition is 730 days or more during 7 years preceding the previous year. So leave the previous year. Last 7 years, totally how many days he was in India? He should be at least for 730 days or more. 730 days or more, guys. If both these conditions are satisfied, then what he will become? Ordinary resident in India. If not, resident, but not ordinarily resident. Yes. Sir, what is the benefit of all this and all? We will understand in section 5. Okay. Now, sir, you told for section 6, subsection 1, even if one condition is satisfied, the person will become resident. Yes. But there are two special cases where this is actually given in explanation. There are two special cases where second condition is not at all applicable. Second condition is not at all applicable. That means if the person is covered in these two special cases, guys, only if he satisfies first condition, he will become resident in India. If not, what? Straight away non-resident. Straight away non-resident. So in the following two cases, only first condition is applicable, which is 182 days or 182 days or more. The second condition is not applicable for them. Which are those cases, guys? All the things has to be taken care of. First one, Indian citizen who leaves India as a member of Indian ship or for the purpose of employment outside India. He is there in India. Now during previous year is going outside India. For what purpose? Employment. When did he leave? Previous year. Now when he has left India for employment outside India during the previous year, they are counting him here. So for him, second condition is not applicable. Guys, please be careful. There is no reference to any income here. There is no reference to any income. How much ever is his income? Doesn't matter here. Doesn't matter here. Okay, so coming to the second special case. Indian citizen plus one more special guy is added here. Person of Indian origin. Engaged in. Engaged andre ಆ engage ಅಲ್ಲ. Business, employment or profession. Where? Outside India. Now is coming to India on a visit. When? During our previous year. 24-25. And his total income other than the income from foreign sources is up to 15 lakh. Up to 15 means less than or equal to 15. Then for him, second condition is not at all applicable, guys. Not at all applicable. What is the difference between first and second point? One major difference. Sorry, two major difference. Person of Indian origin is covered here. Plus, they're talking about income here. First case was is going outside India. Second case is coming to India, not to settle here for a visit. When? During our previous year. Sir, what is tired of foreign country? Now he's coming back to settle here with his family members. Is he covered in this special case? No, he's not covered. They have used the word visit. You have to be careful with it. Whom is he visiting? Where is he visiting? Don't care about it. They didn't mention about purpose of visit and all. Visit should be to India during previous year. Yes, sir. Sir, in the second case, they told total income other than the foreign sources, in simple Indian sources. Indian income. Okay, if it's up to 15 lakh, second case, so second condition is not applicable. What if it is more than 15 lakh? What if it is more than 15 lakh? I have given the arrow mark and I have connected here. Second condition is applicable, guys. Second condition is applicable. But instead of 60 days, they're telling it is 120 days. 60 days, instead of that, it is 120 days. So, for second condition, is it alive, sir, for this guy? Yes, it is alive. But instead of 60 days, 120. So 120 or more during previous year plus 365 or more during 4 years preceding the previous year. Means cumulative, sir? Yes. Not only 120. It is along with 365. Along with 365, guys. Hope you understood. It is as it is, but instead of 60, just make it 120. You don't make it in your material. Okay. It is 60 only. Okay. Only in this special cases, it is 120. Clear? So you should know when 60, when 120, 120. And when second condition is not at all applicable. Okay, so got it? Yes. Chalo. Please be careful, guys. This two, please read it together. Because I have put it like that only. If it is up to 15 lakh, this story. This story. If it is more than 15 lakh, then this story. Okay, so next. If you are not at all covered anywhere here, if you are not at all covered in anywhere, means 6-1, you are not covered because you have stayed in India only for 20 to 30 days, or you are not in India at all. In that case, they are trying to cover you under 6-1A. May not be always, may not be always. Let us see whether you are covered. Section 6-1A talks about deemed resident. Here, the number of days of stay is not important, is not relevant, guys. What is it? We will see. Deemed resident under section 6-1A, capital A. Indian citizen having a total income other than the income from foreign sources more than 15 lakh in previous year shall be deemed resident in India if he is not liable to tax in any other country. Now, if you are an Indian citizen having income from Indian sources more than 15 lakh and not paying tax in any country, Indian government is telling, come my son, come my daughter, we will adopt you. Okay, you are our deemed resident. Why? They want to tax you, not to take care of you. Okay. So they are ready to accept because no other country is taxing you. Let us at least tax you. Okay. So this is only. Please be careful. All conditions has to be taken care. Indian citizen not paying tax in any other country. Indian income is more than 15 lakh. We will consider you as deemed resident. Now one key point. Key point. Look here. Look here. If you have become a resident as per this point or this point, you are always not ordinary resident, guys. You are always not ordinary resident. Sir, should I go and check additional condition? No need. No need. So please keep this in mind. If you have become a resident due to this, that is second condition is applicable for you. You stayed in India for 120 days or more and you became resident. Straight away you are not ordinary resident. Next, sir, I am a deemed resident. Always not ordinary resident. Now listen. One key point is, sir, I am covered in this point, more than 15 lakh. That means second condition is applicable, huh? Yes. Instead of 60 days, how many days? 120 days. But I was in India for 190 days. I was in India for 190 days. Did I satisfy first condition or second condition? First condition. Because we always check what? First condition. So when I have satisfied first condition, no need to check second only. So I am there in India for more than 182 days, sir. Should I check additional condition? Yes. Yes, we have to check. Yes, we have to check. That means if you are covered here and you became resident because you were in India for 120 or more, but less than 182, only then you are straight away not ordinary. You were in India for more than 182. Should we check additional condition? Yes, we have to check. There, if I am not satisfied, then also I can become not ordinary. But my explanation is, should we check or not? Should we check or not? So if you have become a resident due to this point or this point, you are always not ordinary residents. Please keep this in mind. Clear? Yes. Next. There is one more point with respect to this. Yes, sir. Ah. Ah. Not covered. Okay, this also. Sir, here is the person of Indian origin covered? No. Person of Indian origin is covered only in second special case. And obviously, whoever is covered in this case will come here also, but only income will vary. These two are common, guys, except income part. Except income part. So here also is Indian citizen or person of Indian origin is covered? Yes. Now, sir, who is the person of Indian origin? If me or my grandparents or parents, both father, mother, grandfather, both the sides, if any of them are born in undivided India, I am called as person of Indian origin. My origin is from India. Sir, what is that undivided India? Today, India, Pakistan, Bangladesh, before 1947, that is 15th August 1947, it was undivided India. We were all united. So it is undivided India. So assume my grandfather was born in Lahore in 1942. Who am I? Vikas Allah, person of Indian origin. Sure. Next, one rule is there with respect to this, guys. We'll just cover it up. This is not applicable always, only for a special person. According to Rule 126, an individual being a citizen of India and a member of the crew of a ship, the period of stay in India in respect of an eligible voyage shall not include the period beginning from the date of joining till the date of signing off, as mentioned in the continuous discharge certificate. So if I am working in any shipping company as a crew, sir, I am leaving India now as a part of ship. Okay, I am going along with the ship as a member. Now we don't know exactly we will come back and all. It will be very long period. So my company, shipping company will issue me something called as continuous discharge certificate, which is disclosing what day I entered the ship, what day I signed off from the ship. From the date of joining till the date of signing off is considered to be outside India. Is considered to be outside India, including both the days. Including both the days. Assume, guys, I went on 10th June and I came back on 15th July. 10th June to 15th July, including both the days, is considered to be outside India. Is considered to be outside India. I'm randomly giving the example. Assume those days came to 60 days. Okay, let me take 50 days. Sir, the number of days as per continuous discharge certificate came to be 50 days. 50 days is in India or outside India? Na? Outside India. So how many days in India? Take 365 minus 50. How many days in our previous year? No leap year. 25 is not a leap year because February fall in 25. So how many days? 365. Sir, last year we learned it as 366, sir. Last year was a leap year. This year is not a leap year. So 24, 25 is not a leap year. Means because February comes in 25, guys. Clear? Yes. So it has 365 days. So please be careful. Calculate the number of days properly. And while calculating the other number of days and all, please consider the date of coming or date of leaving India to be in India. Yes. And are we supposed to know which month has how many days and all? Definitely, guys. To calculate the number of days. Because some people have strategy, whatever you follow. Okay, I'll evaluate. Sir, invigilator C means this is not copying. Use that strategy because you guys will use this now. Some of you Monday, sorry, January, February, March. Okay, use whatever you want. Try to write the proper answers. Even 1 or 2 days plus minus, don't do it. As or 1 day, no, sir, 2 days, no, you will adjust. No, no. I mean, you will adjust in your marks. Okay, please be careful. Guys, remaining days is considered to be in India, sir. 315 days? Yes, remaining days is considered to be in India. If nothing else is given. Sir, they gave one more story telling you again went in January. Again minus that also. Clear, right? Nothing else is mentioned. Assume the remaining days is considered to be in India, guys. Okay, so now done with individual. Done with individual. Just so. And individual guys, these points are also I have just given. I just read. Sir, now will citizenship nationality depends of or will it be relevant for my residential status? No. Just because I'm Indian citizen or Indian national and all, will I become the resident in India? No. Only for special cases they are giving a reference to Indian citizen. But they never told all Indian citizens are resident. No, no, no. We have to check it based on section 6. Sir, I have a permanent house, permanent family in India. Doesn't matter. Doesn't matter. Next, we came to India, we are going outside India. Why I am going and all doesn't matter. But here, yes, they have told you were engaged outside India for BEP and now you are going outside India for employment. That and all, yes, is there. For other cases and all, why you came, when you are going, with whom you stayed, where you stayed, why are we bothered? Why is department bothered about it? Clear? You came for personal purpose or business purpose, and doesn't matter. Doesn't matter. Okay. Next, stay in India need not be continuous, guys. Stay in India need not be continuous. You can come and go. We will count totally. So that 182 days, 60 days and all. Sir, should it be continuous? No, it need not be continuous. And easy to remember, guys. Easy to remember. Please pay attention. How many days in our previous year? 365. Half of it is 182.5. 0.5 and all don't want. 182. Round off. Okay, sir. I will round up to 183. No, no. 182. 182 half year. Okay, sir. Now into 2. 365 into 2. 730. Additional condition. Clear? Yes. Then 2 months you take. 60 days. Into 2. 120 days. I'm just telling you the math as a shortcut to remember. Because sometimes you will have 62 na, 122 na. What is that? Those confusion you may have. Clear? So days is 60, 120, 182, 365 and 730. When what you should know properly. One confusion I will try to create and clear it. Somewhere else also we have 180 days. Where is it? Year 182 na? Year 182, right? Yes. Somewhere else we have 180 depreciation. Under section 32, when you are claiming depreciation, if the asset is acquired and put to use during the previous year for less than 180, you can claim only 50% of the depreciation. Sir, we didn't think about it. You will not think now. You will create a confusion when you cover both. Clear? You should know when exactly what days. So for section 132, it is 180 days. So if asset is acquired and put to use for less than 180 days during the previous year, how many days should you consider? 180 there. You will claim only 50% of normal depreciation. 50% is not depreciation rate. Assume depreciation rate on furniture is 10%. You will claim how much? 5%. This is for section 32. How many days? 180. 180. Here how much? 182. Residential status. Please know this difference. Clear? Because when you cover both these topics, when every entire syllabus is covered, these doubts will come. These doubts will come. 182 now, 180 now. So now, as you know, better whenever you are trying to study or recall, try to recall like this. Okay, 180 is for this, 182 is for this. Okay, done with individuals. Now coming to second set of people. Guys, residential status of HUF, EOP and partnership firm is given in section 6 subsection 2. And BOI, AJP and local authorities. AJP, not BJP. You know BJP? I'm not talking about that. AJP. Okay, there was something called KJP also in Karnataka. ಏನೋ ನೀನ್ ಕಟ್ಟಿದ್ದ ಮತ್ತೆ ಏನ್ ಕೈ ಎತ್ತಿದ್ದಾರೆ So AJP means artificial juridical person. So for them, I am covering it together because the criteria is same, guys. if the control and management of the affairs, business affairs, okay, is only or partly in India, they are considered to be resident in India. Only or partly, even if one decision is taken in India is enough. Here decision means policy decisions. Okay. So both cases same, guys. Sir, what if it is completely outside India? They are non-resident. They are non-resident, completely outside India. Now listen. Only for HUF we have additional condition also. Whereas for others no additional condition. If HUF become resident as per section 6 subsection 2, we have to go to section 6 subsection 6 to see whether they are ordinary or not ordinary. Conditions remains same. Conditions, both the conditions remain same. But who should satisfy now? HUF, huh? Can HUF go outside India, come inside India? No, no, no. Karta. Who is the head of HUF? Karta. Now, Karta is the head of HUF. On behalf of HUF, Karta should satisfy both the additional condition given under section 6.6. If Karta satisfy both the conditions given under section 6.6, who will become ordinary resident? HUF. HUF will become ordinary resident. Now let me ask you. Karta in his individual capacity is ordinary resident. What is the residential status of HUF? Ordinary. Karta in his individual capacity is not ordinary resident. What is the residential status of HUF? Not ordinary resident. Karta is a non-resident. What is the residential status of HUF? What is the residential status of HUF? Question mark. Majority of the time, HUF also might be non-resident. Sorry, not ordinary resident, but we cannot conclude. Single line. How is it, sir? Guys, listen. Assume I am the Karta of an HUF. In the previous year, I am in India only for 50 days. So I am non-resident. I am more non-resident. But in the past, I was completely in India. In the past, I was completely in India. I am non-resident. So for my individual capacity, will we check additional condition? No, I will not, because I am not non-resident already. Now for HUF, they told if Karta satisfy both the condition given under section 6.6, what is the residential status of HUF? Ordinary. Now if I check the conditions applicable under section 6.6, am I satisfying both? Yes, because I was completely in India in the past. So that 2 years resident out of 10 years taken care. 730 days or more during 7 years preceding the previous year taken care. I am non-resident. But am I satisfying both the condition under section 6.6? Yes. Guys, once I become non-resident, for my residential status as an individual, we never check additional condition. But now for HUF they told, if Karta satisfy both, HUF will become ordinary. Can we go and check even though the Karta is non-resident? Yes. Please read the law as it is. Don't create your own law. Okay, when you're writing the law, students will write their own law. Okay, in the process of studying and writing income tax law, they will create their own law. They didn't tell if Karta is ordinary, HUF is also ordinary. If Karta is not ordinary, HUF is also not ordinary. Did they use that word? No. They told if Karta satisfy both, then HUF is ordinary anta. So irrespective of the residential status of Karta, if he satisfy both, residential status of HUF is ordinary resident. Ordinary resident, guys. Hope you guys got it. Clear? Just. Okay. And only for individual and HUF we check additional conditions. Rest all only one stage. Only for individual and HUF, guys, 2 stages. Okay, sir. Now coming to companies. Residential status of companies are covered under section 6.3. Indian company will always be resident in India, no matter where their poem is. Whereas other than Indian company, that is foreign company, they are resident in India only if their poem is in India. What is this poem, sir? Place of effective management. Means where the key commercial and management decisions are taken. Who takes the decision on behalf of the company? Board of directors. So if they have taken the decisions in India, poem is said to be in India. And guys, there are some criteria to decide whether the poem is in India, outside India and all. but that is not a part of your intermediate syllabus. That is not a part of your intermediate syllabus. You will be learning it at final stage. Okay, so please be careful. Poem is relevant only for which company? Foreign company. Whereas Indian company will always be resident in India, guys. Okay, so next, section 6, subsection 4. Body of, that is we have anyway covered. 6.2 along with 6.4. Next, 6.5. 6.5. One residential status for all sources of income. Sir, we have 5 heads of income, sir. So for each head of income, should I calculate residential status separately? No, no. One residential status for 1 year for all sources of income. Now, sir, I have become resident now. Does it mean that I am resident forever? No, no. I have to check the residential status for each and every year separately. For each and every year separately. Where is it given? Section 6.5. But most now, if I am permanently settled in India, should I check every year? No. It is understood I am resident in India. ನನಗೆ ಬೇರೆ ಏನು ದಾರಿನೇ ಇಲ್ಲ. Sir, karma bhumi, dharma bhumi, everything is India only, sir. So in that case, I am always resident. This checking and all we will do for whom? Those who are traveling. Keep on traveling. Now, in the exam, will they give our story? No. Whose story they will give? People who are traveling, coming, going, coming, going. So we have to calculate. They will not give number of trips and all. Only one trip they may give. They tell this guy was in outside India, he came to India, or going outside India. So you have to count the number of days, guys. Here, yes. Okay. So this is all about the residential status of India. Sorry, the assesses, individuals, and other set of people. Okay. So totally 7 subsections are there, including 1 year. Okay. Easy to remember, guys. Easy to remember. Let me just give some shortcut for this. Okay. 6.1 covers residential status of whom? Individual. Individual means how many people? How many people? 1. Any doubt in that? ಇಲ್ಲ ಸರ್ ನಾನು ನನ್ನ ಫ್ರೆಂಡ್ ಒಂದೇ ಓಕೆ ಎರಡು ದೇಹ ಒಂದು ಆತ್ಮ okay that and all you keep it aside. Individual means 1. HF to form a family at least there should be 2 people HF home at least 2 partners should be there na. Yes, even for AOP at least 2 people should be there. Sir, no sir, I am the only person. AOP, no, you are individual. Next, company, section 6 subsection 3. Hey, company will start with what, which alphabet? C is the which alphabet in the order? Third. 6, 3. Got it? So C company 6 subsection 3. Okay, sir. ಬೇರೆದೆಲ್ಲ ನೆನ್ಪಿಟ್ಕೊಳ್ಳಿ ಸಾಕು. ಚಲೋ, because some important things I have told you, others you can try to remember easily. Yeah. So only for individual HF additional conditions are there, guys. Rest of them straight away either ordinary resident or non-resident. In between category not ordinary will come only for individual and HF. Yes. We covered everything. Yes. Residential status done. Residential status done. Now let me just give a clarity on that. Okay, little more clarity. This is only for number of days calculation, guys. Yeah, this is only on number of days calculation, guys, which is our previous year 20. Okay, our previous year is 24, 25. Whenever you see any question on residential status, first thing you have to check what? This year, how many days he or she was in India? He or she was in India. And sometimes straight away it will be less than 182 days. So this condition will be ruled out. This condition would be ruled out. And next thing you will check is, are they covered under the special cases? Okay, and when you read the question itself, you will get an insight. They will start with Indian citizen, that this he was settled outside India, coming to India, or he was in India, going outside India. So all this story they will give. Immediately things should start striking to your mind. Yes, this is on special case. This is on special case. Yes. Next, that Indian citizen and all, please be careful. They start the question normally with that, the first liner itself. Okay. Next, to check this additional thing, this 4 years or 7 years or 10 years and all, we should leave 24, 25, guys. We should always check what? Past. Clear? So to check 4 years or even 7 years or even 10 years, we should not include 24, 25. It is only the past. For example, this 4 years, 365 or more. 4 years means this 4 years, excluding 24, 25. Excluding 24, 25. And here all 4 put together, it should be 365 or more, guys. Okay, same way 730 and all. So 730 means here it would be 7 years and here it would be more than or equal to 730 days. Clear? Yes. Guys, if at all, if you are referring to ICI material or any other books and all, see, sometimes, not every time, sometimes they give same condition, sometimes they give it in a reverse way. You don't get confused. Okay, reverse way means what, sir? See, this they will tell an associate will become not ordinary resident. In individual will become not ordinary resident if he is a non-resident for 9 years out of 10 years preceding the previous year. Or else he was in India for 729 days or less during 7 years preceding the previous year. I repeat, they will frame like this. An individual will become not ordinary resident if he satisfy any one of the condition. Reverse case I am applying. Reverse. When is it, sir? He is a non-resident for 9 years out of last 10 years. That means obviously he couldn't become resident for 2 years. Na? Okay. Next. He is in India for 729 days or less during 7 years preceding the previous year. 729 or less. Clear? That means he was not in India for 730 or more. Correct, na? Just instead of like this, it is given like that. Ultimately, it will go to same place. Clear? Yes. Result will remain same. Residential status will not change. Only it is a reverse application. That's all. Now, what should I follow, sir, in the exam? Follow this, guys. I suggest you to follow this. If not unnecessarily, it will cause a confusion. Clear. Why did I mention is because if you are referring to any other book or if you are referring to the answers and all, if they are given like this, you will panic. Oh, you, sir, didn't cover this only. Okay, it is not out of syllabus. That it is just given in a reverse way. That's all. Section 6 done. Next, scope of total income, which is given in section 5. Now, what incomes are taxable in India depends on what? Residential status. Where the income is earned, where is it received? Where is it earned, where is it received, and when it is earned, means in the previous year or not. Because obviously we are bothered about what is earned in our previous year. Which is our previous year? By the way, 24, 25. I keep asking because this is very important. In all your answers you will use. Okay, computation of so and so for assessment year 25, 26 or previous year 24, 25. Guys, you may get confused when they are given both in the question. Sir, previous year assessment year, what should I do? In your answers, try to use always assessment year. Okay, but obviously year will be +1 or -1. If assessment year it is 25, 26, if it's the previous year it is 24, 25. You know, na? You are aware of it. Yes. Yes. Scope of total income, very simple table, guys. This will tell you what incomes are taxable in India. If income is received or deemed to be received in India, as if, deemed means as if, then taxable in all the 3 cases. Here 3 cases I have taken. Ordinary resident, not ordinary resident and non-resident. Sir, can a person become all 3? Definitely not. Anyone. Okay, but for study purpose, academic purpose, we are studying together. Clear? Yes. So if income is received or deemed to be received in India, always fully taxable. Now, sir, what is received? Okay, sir. What is this deemed to be received, sir? It is given in section 7. As if it is received, guys. As if it is received. See, I am the ultimate beneficiary. Maybe I have not received the money in the previous year. Money has gone to my account. I will withdraw sometime in the future. Maybe at the time of retirement and all. Clear? So it is as if I have received in the previous year 24, 25. Let me give an example. Guys, employer contribution to recognized provident fund of the employee is exempt up to 12% of salary. Did you learn it anywhere? Which head? Income from salary. This exemption is given under which section, sir? 10, 12. Exemption is given under section 10, 12. Telling up to 12% of salary is exempt for employer contribution to recognized provident fund, RPF. Now, sir, if employer is contributing, assume 14%. Is 2% taxable in the hands of employee? Yes. Under which head? Income from salary. Income from salary. Yes, sir. Now, did literally employee receive this amount in his bank account? No. Where is it contributed? To his PF account. Will he withdraw the amount now only? May not be. When will he withdraw? When he has some emergency or maybe at the time of retirement. So, he would have not received the money literally. But who is the ultimate beneficiary of this? Employee. Clear? Is it taxable? Yes, has deemed to be received. Same way, guys, in the same salary head, for interest, they have given the exemption up to how much? 9.5% interest rate, not salary. Okay, this is 9.5% per annum. So 12% of what and all we will see. 12% of salary means what? There is something called as basic pay, DA plus commission, condition attached and all that we will understand in salary chapter. Okay. Sir, interest is exempt up to 9.5%. Assume the interest is 10%, sir. That means 0.5%. Is it taxable, sir? Yes. Now 0.5%, sir, I would have not received it. No, sir. Yes, interest will be credited to your PF account. It will be keep on compounding until you withdraw it. Now, literally, I didn't receive the money. But as if received, for whose account is it is credited? May not be for my bank account, for my PF account. Who will enjoy that amount later? Me only. So is it as if I have received it? Same way. Employer contribution to NPS account of employee. Employer contribution to NPS, National Pension Scheme, or we also call it as Atal Pension Yojana. First, employer contribution has to be included under the salary head. Then go and claim deduction under section 80CCD for both employer as well as employee contribution. Now, sir, employer contribution, we have to add it under the head salary, no, sir. Did I get any money, sir? No, money has been deposited to your NPS account, your own NPS account, as if received by you now, as if received by you during the previous year. Is that clear? Yes. So these are the example for deemed to be received, guys. Okay. And guys, received means, sir, here they have used the word received. Received means anything, sir? No. Only when I originally receive it, when I have earned the income. Now, I received a salary income and a part of it I am transferring it to my wife every month for household expenses. Is it received for her also? Is it taxable for her? No. It is just a transfer or remittance. Remittance transfer is not considered to be received, guys. Clear? Only when I have earned the income and received it, yes, it is considered to be received. Now, if I am transferring it to my parents, children's, or maybe wife, is it considered to be received by them? No, no. Is it taxable for them? No. Oh, next. Income which accrues or arises in India or deemed to accrue or arise in India. Accrue or arise, nothing but earned. If income is earned in India, taxable always. All three cases taxable. Deemed to accrue or arise in India, always taxable. So what is this deemed to accrue or arise? Simple. They have given it in section 9. Section 9 specify what income is deemed to accrue or arise in India. Section 9. The following income shall be deemed to accrue or arise in India. Any income accruing or arising to an assessee in any place outside India, whether directly or indirectly, through or from a business connection in India. Guys, if any non-resident sitting outside India is carrying on any business activity in India through an agent, whatever that non-resident earns income through business connection in India is considered to be income deemed to accrue or arise in India. Is considered to be income deemed to accrue or arise in India, guys. Got it? Yes. We are not talking about the income of agent. Agent will earn commission. Obviously, he is in India. It is an Indian income. No doubt in that. We are talking about whose income? Non-resident guy who is sitting outside India, doesn't have any office or branch here. He is carrying on business activities through whom? Agent in India. So anything you earn from this business connection is deemed to accrue or arise in India, guys. Next, if you have any property asset or capital asset in India, anything you earn from that is an Indian income deemed to accrue or arise in India. Sir, I have asset, property or capital asset in India. I am earning rental income out of it. Is it an Indian income? Yes. Sir, I sold it, sir. I have earned capital gains. Is it a Indian income? Yes. Some drama and all they will try to create, guys. For example, they will tell house properties in India but sold to a buyer outside India. Even for sale consideration is received in foreign currency and the property is registered outside India. Doesn't matter. Where is the source? Property is in India. Is it an Indian income? Yes, that's all. Clear? Yes. If it is held, rental income covered here, or if it is sold, capital gains income. Okay, so next. Income which falls under the head salaries, if it is earned in India, salary payable for service rendered in India would be treated as earned in India. If employment service is given in India, salary income is always considered to be Indian income. Clear? Now there can be a cases where I have rendered my employment service in India, retired, went and settled in US, receiving pension there. Is it my salary income? Yes, part of salary only, if I am alive. I am receiving pension from my former employer, part of salary income. Is it an Indian income? Yes, because where are the roots? India. Why am I getting pension? Because I gave employment service in India. So is it an Indian income? Yes. Is that clear? Yes, sir. Next, sir, I am gone. My family members are receiving family pension. Is it taxable for them? Yes, under the head other sources. Under the head other sources. There also we consider like this only? Yes, because where is the root? Employment service is in India. Employment service is in India, guys. Yes. Next, third clause. Income from salaries which is payable by the government to a citizen of India for services rendered outside India. Now, this assessee is an Indian citizen rendering services outside India for an Indian government. Who is paying salary for them? Indian government. Who is the employer? Indian government. Yes, sir. Like this Indian embassy and all guys. Even spy, whoever is working as a spy for India outside India. You know Ajit Doval and all, they had worked as a spy for India for number of years. Okay, who is in charge of now National Security Agency. Like this number of people will be working outside India for an Indian government. For them, whatever salary is paid by central government, even though they're rendering services outside India, still it is considered to be Indian income. Okay, so now coming to allowances and perquisite. Guys, allowances and perquisite given to these people, all allowances and perquisite, any, is completely exempt under section 10(7). All the allowances and perquisites given by the central government to the citizen of India who is rendering services outside India to central government is completely exempt. Any allowance and perquisites. That means entire salary is exempt? No, I didn't tell that. That means basic pay, DA, commission, is it taxable? Yes. I told only allowances and perquisites are exempt. Salary will not include only allowances and perquisites. It will have other components also. Okay. Next, dividend paid by Indian company outside India would be taxable in the hands of shareholder at the normal rates in India. Sir, what if it is in India? Always Indian income. Here they are giving clarity that if Indian company is paying dividend outside India also, it is considered to be Indian income because some FII, FPI and all would have invested in Indian company. They are getting dividend. They might be receiving it outside India. Doesn't matter. It is an Indian income. It is an Indian income. Yes, sir. Next, interest, royalty and fee for technical services. I will cover it together, guys. I will cover it together in this chart. Please pay attention. Bit confusing. Please pay attention. Interest, royalty, fee for technical services. I am doing it together because the conditions, criteria and all is same. Is deemed to accrue or arise in India for a recipient. Who is the person who has earned the income? Non-resident. If it is payable by, three set of people are there. Resident, government, non-resident. Guys, who are these people? Payer. Who are those? Payer. Payer is three possibility. Who is the person who has earned it? Non-resident. No doubt in that. Okay. Sir, why didn't they cover resident? For resident, entire global income is taxable. Everything is taxable. So here they have covered only non-resident. Guys, listen. Listen, let me simplify. If government pays this, always taxable. For whom? Non-resident who has received it. It is always taxable, even though it is the non-resident. Next, if resident or non-resident pays it, guys, simple. Now I have assume you are a non-resident. Okay. I have borrowed a loan from you. I am paying interest to you. Now, is this interest income deemed to occur or arise in India for you or not? We are deciding. Now, we should see for what purpose did I use this money. Whatever money I have borrowed from you, if I have used it for any business or profession in India, or to make income from any source in India, I have invested somewhere to earn income, either interest, dividend, or whatever. In that case, for you, it is income deemed to occur or arise in India. Sir, whatever money I have borrowed from you, I have used outside India for my business or profession, or to make any income from any source outside India, I have used outside India. Then whatever I am paying for you is not income deemed to occur or arise in India. Is that clear? So all three cases are like that. Whatever loan I have borrowed from you, who are you? Non-resident. I have borrowed a loan from you, or I have taken royalty services from you, or I have taken technical services from you. Where should I use it? In India. If I have used it in India for my business or profession, or to make any income out of it, for you, interest whatever you receive from me, or royalty or fees, is income deemed to accrue or arise in India. When it is income deemed to accrue or arise in India, it is taxable for you, even if you are a non-resident. Did you guys get it? Yes. Let me just go through it, guys. So if payer is the government, always taxable for the recipient. Now if payer is a resident, generally taxable. For whom? Receiver. But in the following two cases, not taxable itself. Why? Because it is not deemed to accrue or arise in India. If income is not deemed to accrue or arise in India for a non-resident, it is not taxable. If it is received in India, yes, taxable. But sir, no, sir, it is deemed to accrue or arise outside India, no, and he has not received it. Is it taxable? No. Which are those two cases? If the money borrowed and used, or technical services or royalty services are utilized for the purpose of business or profession carried on outside India. Second one, if the money borrowed and used, or technical services or royalty services are utilized for making income from any source outside India. So in both these cases, is it income deemed to accrue or arise in India? No. Any other case means, is it income deemed to accrue or arise in India? Yes, guys. Chalo. Next, coming to the last case. If payer is also non-resident, receiver is anyway non-resident, payer is also non-resident. In that case, it is taxable in the hands of recipient only. Guys, here whatever I have given is just a reverse of this. Just a reverse of it. So here they are telling it is taxable only if it is used in India. It is used in India. Here what they told, it is not taxable in India if it is used outside India. If it is used outside India. Here they are telling it is taxable only if it is used in India, in India. Simple. Okay. But one catchy point here is there. Please be attentive. If money is borrowed and used for the purpose of business or profession carried on in India. Okay. Next, if technical services or royalty services are utilized for the purpose of business or profession carried on in India, or making income from any source in India, only then it is income deemed to occur or arise in India, guys. Now, one thing is missing here, one thing, especially in the first bullet. I don't know whether you observed it or not. Listen, let me highlight that. You are non-resident, I am non-resident. I have borrowed a loan from you. I am using it for the business or profession in India. I am paying interest to you. Is it an income deemed to occur or arise in India for you? Yes, it is an income deemed to occur or arise in India. Next, same, you are also non-resident, I am also non-resident. I borrowed a loan from you. I borrowed loan from you. I have invested in some other company's shares, or I have given it as a loan to someone else to earn income like interest, dividend, or anything. Now I am paying you for whatever loan I have borrowed, interest to you. Is it an income deemed to occur or arise in India for you? Is it an income deemed to occur or arise in India for you? No. That point is missing here. And I have not given by mistake. This is how it is given in the law. Is that clear? So if money is whatever money is borrowed, if it is used for making income from any source in India, that point is not covered here. That point is not covered here. If it is invested in my own business or profession, is it covered? Yes. Is that clear? Whereas royalty and technical services, both are covered. Both are covered. If it is used for my own business or profession, or if I have used it to make any source of income from India, both are covered. Okay. Last clause. Any sum of money paid by a resident Indian to a non-corporate non-resident or foreign company. Section 918. Income arising outside India being any sum of money paid without consideration by a Indian resident person to a non-corporate non-resident or a foreign company would be deemed to accrue or arise in India if the same is chargeable to tax under section 56 to 10. That is, if the aggregate of such sums received exceeds 50,000. Simple, guys. Let me write as an example. Now, who is paying it, sir? Resident. Who is giving it for whom? non-resident or foreign company is giving something without consideration. Without consideration means nothing is coming in return. Nothing is coming in return. So for this guy in India, will we operate section 56 to 10? Yes, we will operate. If the value of the gift given or the value of the item is given is more than 50,000, then for the recipient, even though he is a non-resident, we will apply section 56 to 10 under the head income from other sources. Yes, so this is all about section 9, guys. Section 9 talks about what? Income deemed to accrue or arise in India. So this cases, guys, this two, received or deemed to be received, accrue or deemed to accrue, always taxable, no confusion at all. No confusion at all. Next, let me just give a number for this. These numbers are not given in the law. I am just putting it for reference. 1, 2, this is 3, 3A, 3B. Now, if income is earned and received outside India, there are two possibilities. Check, is it from a business controlled from India or is it from a profession set up in India? If yes, sir, source might be outside India, but control is in India. Control is in India. They're telling it is taxable for ordinary and not ordinary. It is taxable for ordinary and not ordinary. Whereas for non-resident, not tax. For non-resident, it is not taxable. Yes. Now, any other case, no control, nothing is in India. Taxable only for ordinary resident. Taxable only for ordinary resident. So if I simplify, guys, for ordinary resident, global income is taxable. Earned anywhere, received anywhere under the sky is taxable for you in India. Is taxable for you in India. Next, coming for non-resident, you can see only Indian income is taxable. That is earned in India or received in India. That's all. Only that is taxable. Clear? Only be careful with this guy. Okay, this additional point especially is there. Now, sir, what exactly is this? Income earned and received outside India from a business control from India or from a profession set up in India. Guys, assume I have set up my practice in India. Okay, my practice has grown outside India also. Setup was in India. Now I am going to abroad to give client to give service to one of my client in UK. I gave services in UK, received money in UK only, pounds. Came back to India. Is it taxable for me? Yes, only if I am ordinary or not ordinary resident. Where is it falling? This criteria. Clear? Yes. Next, sir. Reliance Industries has set up a subsidiary company in Dubai. Full control is in India. Okay, they sit for a family dining. Okay, at the dinner table, they make decisions with respect to what should this subsidiary company do and all. So complete control is in India. So is that subsidiary company for them, whatever they earn, as the control is in India, will it fall in this category? Yes. Only if they're resident or not ordinary resident, it will be taxable in India. Sir, what if they're completely non-resident? Then nothing. Okay, this will not come. This point will not come. Is that clear? Yes. Sure. Any other source means no control, nothing is in India. Earned as well as received outside India, guys. Yes. Now, one key thing, guys, while covering section 6, we saw total income other than the income from foreign sources. Correct? This point, this point, this point. Wherever we saw that 15 lakh point. Correct? Total income other than income from foreign sources. So to count, what is it exactly? In simple, I can call it as Indian income. In simple, I can call it as Indian income. Sir, what and all should I count, sir? Should I consider this one? Yes. Should I consider the first case? Yes. Second case, should I consider? Yes. 3 should I consider? Only 3A I should consider. Actually, only 1 and 2 is an Indian income. 3 is not an Indian income. But 3A, they're trying to show it as Indian income through control. or as it is set up in India, we are telling, hey sir, control is in India, control is with us. Okay, so we will indirectly try to project it as a Indian income. Clear? So normal Indian income is what I have received in India or earned in India. But they are trying to cover the next case also. Yes, sir. Got it now? Yes. Oh, so to calculate that 15 lakh and all, guys, please take only this part and not the last one. And not the last one. Okay. Points to remember. When once an amount is received as income, remittance or transmission of that amount from one place or person to another does not constitute a receipt of income in the hands of the subsequent recipient or at the place of subsequent receipt. I gave an example for already. Okay, for this I have already given the example. Only when I receive the income it is taxable for me. When I transfer it or remit it to others, again for them it will not be an expense income. And now sir, I am paying salary to my employees. For them is it an income? Yes, for them it is received. For them it is received. Yeah. Next, second point. Any past untaxed foreign income, if brought into India, is not taxable in the hands of any assessee. Sir, I had earned some income in the year 2015-16 in foreign country. I was supposed to pay tax in that foreign country. I have not paid it. Now, in the previous year 24-25, I am bringing that into India. Indian government will welcome you from both the hands. Why? You have not lost anything. You have not lost anything. It is a loss of revenue for foreign government. Now we are bringing the money to our economy. Well and good, na? Okay, money is flowing into our economy. Government is telling, come, don't pay any tax on this figure, not on any other income. Only on this figure you will not pay tax. Only on this figure you will not pay tax for anyone, whether you are ordinary, not ordinary, or non-resident. Next, any exempt income will be excluded from total income of every assessee. So, if your total income includes any exempt income, while calculating, exclude it, guys. While calculating it, exclude, because normally exemptions will not be given based on your residential status and all. Yes, so in that case, enjoy the exemption. So in your total income calculation, you need not include it. Now, guys, you might have doubt only for your knowledge purpose. Sir, now for ordinary resident, global income is taxable. Now assume I have earned some. Let me just give an example and explain. Assume, guys, I have earned Indian income 20 lakh. And I also have a foreign income, which is earned, received everything outside India. No control, nothing. Foreign income, purely foreign income. 10 lakh outside India. I am an ordinary resident. I am a ordinary resident. What is my total income now? 30 lakh. Agree na? Yes. So I should calculate tax on how much? 30 lakh. So I have to calculate my tax liability, pay tax on 30 lakh. Yes. It is coming to assume. I am just taking random figures, guys. Assume it is coming to 10 lakh. Assume it is coming to 10 lakh. Should I pay 10 lakh to Indian government? No. Now on this, guys, assume it is from USA, I would have already paid tax because that is the country in which I have earned the income. They would have already taxed. Now Indian government has double taxation avoidance agreement with all the developed and developing countries, through which I get foreign tax credit for this or double taxation credit. Clear? Yes. So that means for whatever tax I have paid in USA, I will get a reduction. Assume I have paid 6 lakhs, not 6 lakh, only 10 lakh. No? 1 lakh I have paid. So will we reduce it? So yes, remaining 9 lakh I have to pay in India. Remaining 9 lakh I have to pay in India. One key thing here is, now assume here that 10 lakh would have been covered at the highest rate, 30%. Whereas assume in USA I have paid tax only at 10% in USA. Clear? In India we covered it in our total income calculation. So normally that will fall under your highest slab calculation. Yes. So in India, while calculating this 10 lakh, you would have got it as 3 lakh. On 10 lakh, how much, guys? 30%. 3 lakh, correct? Now, how much credit you are getting? 1 lakh. Indirectly, you ended up paying 2 lakh in India also. Indirectly, you ended up paying 2 lakh in India also. Hope you understood. Clear? And this foreign tax credit calculation and all, we call it as double taxation relief. Okay. Or unilateral relief and all. This is a part of your international taxation at final level. At final level, you will learn this. We have different methods to calculate all this and all. Don't worry about the numbers and all. I just randomly given just to explain you the concept. Just to explain you the concept, guys. Now, so by doing this, what they made is, sir, now assume on the same income in USA, I have paid tax at 10%, whereas in India it is 20%. So they try to collect tax at what rate here? The difference 10% in India, guys. Yes. Chalo. I guess this is all about the residential status and scope of total income, guys.